So a strong year in 2021. And you asked me for the guidance, and at least a 4% margin we see. We see that we also will see growth of sales in 2022, and we will also grow our dividend as well. By the way, for 2021, we propose a dividend of 95 cents, euro cents, which is almost a 6% growth compared to the previous year. We have strong cost-saving programs, and also for the guidance for 2022, 850 million we see. We see a free cash flow of 1.7 billion euros. We see a share buyback program of 1 billion confirmed for 2022, and a low to single EPS growth compared to very high EPS growth in 2021. So overall, I think a very solid outlook with a strong, solid margin, with sales growth. And we also keep investing in our business, 2.5 billion of capex in euros. Keeping investing in our business, and you know us of maintaining the quality of our business, not only the stores, our 7,000 stores, but also our online business and our e-commerce business, and further investing also in our bol.com growth platform. Another point I would just like to make, Juliana, if I may, is that we're also very proud on our ESG targets, where we advanced our net zero targets, scope 1 and 2, with 10 years, so that we will be net zero by 2040.
Frans, very comprehensive look at the guidance you're giving this morning. But just to pick up on Juliana's point, obviously that issue of margin, flat year on year effectively, and you do seem to be implying that there will be challenges going forward. Is that down to higher operating costs around staffing numbers and higher pay, or is it to do with this PPI inflation figure that we're seeing with higher product prices and your inability really to match the input prices with the output prices?
No, I think we saw that in 2020 and 2021, of course, there was some COVID effect for a very strong in-home consumption market. We think that effect might be lower, but that we still have a strong in-home consumption effect also in 2022. So we saw some more sales leverage in 20 and in 21, and a little bit less sales leverage in 22. So and more than 4% margin is still a very solid margin when you also look at when you combine it with free cash flow, our share buyback program, and our total shareholder return. So we're optimistic on 2022 in the fact that we are well positioned with our omni-channel business. Over the years, we invested heavily in e-commerce and online. That is paying out now. We see a moderating in-home consumption, but still stronger than pre-COVID. And we think that with our offers in our supermarkets, with convenience food, with healthy food, with good choices for every wallet of every consumer, strong own brand sales, that we are well positioned for 22 to also gain market share like we did also in 2021.